Good morning and welcome to NWR's Vantage Point Conference. We have LGI up next. We've got the CEO, Dr. Jessica North, and the COO, Jared Doran. Before I hand it over to the guys to go through the presentation up on the screen, I'll just remind you that we want it to be an interactive and Q&A session post-presentation, so you can submit those through the Q&A panel at the bottom of the screen. And then we'll go from there. But Jessica, Jared, I'll hand it over to you now to get started. Thanks very much.
Thank you. Thanks very much for the opportunity to present today. We'll start off with an overview of LGI. So LGI is there we go. So LGI is a company that specializes in landfill gas management and the conversion of the recovered or captured landfill gas into different revenue streams. We use the gas to generate carbon abatement credits and also renewable energy, which we sell into the grid and to other end users. So our tagline has been from day dot since 2009, when we were established, is saving the planet one landfill at a time. So we design, we install, and we operate biogas recovery systems. So that's really the everything from the network of pipes that are inserted into landfills, into rubbish dumps, to extract the gas. And we also design and manufacture the combustion technology, so the bespoke biogas flaring units. And also we design our build, own and operated electricity plants. So there's some visuals of the range of activities that we participate in. So just to give you, I guess, a 101 of how our business works and what we actually do. When you put your rubbish into your bin, the bin goes to a landfill. Typically in Australia, the majority of waste is landfilled. And in Australia, we have over 1,000 landfills in this country. And the majority of the waste goes to about 30 large municipal dumps near cities. Once waste is buried in the ground, there is a natural process. These inherent bacteria that produce methane start to decompose the waste. They produce a mixture of gas that is roughly 50% methane, 50% carbon dioxide. Now, methane is a really potent greenhouse gas. It has a global warming potential roughly 28 times higher than CO2. And so you can actually destroy or manage methane by combusting it. And when you combust or burn methane, you convert it into far less harmful CO2 and water. Methane also has operational risks at a landfill, so it can be an asphyxiant, it can be explosive, and it can cause dieback of ecosystems around a landfill site. So it needs to be managed. So we come in and we install pipework to extract that gas. We install a flare initially to combust the gas and also to test out the volume and characteristics of the gas. By combusting the gas in a flare, we are achieving abatement, and so we have projects that are registered under the Emissions Reduction Fund to generate Australian carbon credit units, which are a saleable commodity. If the site is sufficiently big with enough gas of sufficient quality and quantity, etc., we will then progress the site to a power generation site. So we build, own and operate power stations on landfills that use that renewable fuel source to generate electricity. To date, the majority of our power stations have exported that electricity to the grid. Because it is a renewable energy source, we get the wholesale power price, as well as a large-scale generation certificate issued under the renewable energy target. We also have behind-the-meter arrangement at one of our sites and are pursuing additional sites where we don't export to the grid. We actually provide the energy directly to an end user. And we are also about to install our first battery on one of our power station sites to augment the production of power. Jared will go into a bit more about that in a little bit. So if we move on to the next slide, that's just for the overview. We currently have 8 power stations, and a few months ago it was only 7. So this is again a snapshot of the business today. We have 8 power stations. We have 15 carbon credit sites registered under the Emissions Reduction Fund to generate credits. We basically across 25 landfills currently. Again, come back to this slide in a few months, and it's dynamic. We have a growing portfolio of projects. We are on the eastern board of Australia, predominantly in Queensland, New South Wales, and the ACT. So over to Jared.
Thanks very much, Jessica. So just to recap here, with the facilities that have sufficient biogas, both in volume and quality, where LGI has developed a power station, we've been exploring how those power stations can play a key role in the energy transition. I'm sure for anyone that's watching today would be aware of coal plant closures and perhaps even a resistance at a federal level to see new oil and gas facilities coming into the East Coast gas market. So there's an overwhelming driver and desire to see our energy grid decarbonise, and sources such as biogas offer part solution in this transition piece. So the facilities that we develop traditionally have been sub 5 megawatt. So they're smaller in size, they're connected within the distribution network, which allows them to come online and connect with a relatively quicker pace than when you compare this to a transmission size project. But it also allows for the energy that we create to be used more locally within that distribution network. So it's not having to travel vast distances across the energy network where there's further losses, and it requires typically more capex on a transmission level. But it also enables us to explore where there may be nearby energy users. And as Jessica touched on, we've successfully developed a project that we brought online in December of just last year in Toowoomba, where we're producing biogas from our facility and we're powering council's wastewater treatment facility, which is directly adjacent to our site. And that's a great outcome because in this instance, the council and the local community benefit from a little eco precinct of where material that was once waste is being used to create a useful product, being the electricity, and it's renewable electricity. And this is directly offsetting and reducing their emissions of another key resource, which is the public wastewater treatment facility, essential to safe, living in a modern society as well. On our sites that we also flare from, we don't always have the luxury of advancing them towards a power station. There could be reasons why we choose to keep a facility as a flare. This may be the distance from the energy network, but it also may be the practicalities of if we were to upgrade a site to a power station. There are instances where flaring is a more sustainable, a more economically viable long-term option for a facility as well. And in those instances, you still achieve the same benefits of emissions reduction, odour management, and great environmental outcomes. It may just be that there's not the added advantage of renewable energy from those sites, but we continually reassess that as we roll through our sites and our portfolio. So percolating down the 3 main revenue sources for the business, starting on the left-hand side of this slide, we have a whole team who specialises in the expansion and the capture of biogas from our facilities. So they're constantly out looking for opportunities to put in more of the gas gathering pipe work in our current facilities, but also working with clients who, under different contracting models, have chosen to perhaps keep the carbon credits themselves. And so LGI may come on site and assist them with their own biogas expansion plans. And that there we consider our site infrastructure and our site management division. So this is a fairly steady part of our business. Year on year, we see a typical $1 million or so of revenue from that part of our business sector, which I'll come to in the financials shortly. Where we have the opportunity to develop a project into a carbon abatement project by putting a flare on site, this is the middle division of the orange area. This is where new revenue is created by the creation of carbon credits. So where a site has the ability to be demonstrated that the gas being recovered is additional or above the regulatory requirements, a site or a project can participate in the Emissions Reduction Fund. And LGI has been successfully participating in this federal scheme now since 2012. And it's an evolving scheme, as regulation does have to evolve with changes in society and changes to markets. We've successfully navigated those changes as well. And Jessica participates in a number of the working groups at a federal level as well. Moving to the third main revenue stream, this is our renewable energy sector. And so this encompasses both the power, but also the LGCs. And so when we talk to the financials later, you'll see that that's becoming a growing portion of our business. Not that the other two areas are of lesser value or importance, but simply as we expand our portfolio and we add more generation, we're able to create more renewable energy and more LGCs. The beauty of this part of our business too is that we also continue to create ACCUs because we're still actually abating the emissions from the landfill while creating the renewable energy. So this is a great part of our business as well.
I will just jump in and mention that more than 85% of our client base is currently local government. And when we enter into these agreements to either provide the carbon abatement and ACCU or ACCU generation or the power generation, the agreements are anywhere from 10 to 30 plus year long agreements. So these are long-term engagements with local governments, which greatly minimizes for us supply chain risk and default risk as well.
Thanks, Jess. And even with these contracts, starting from the infrastructure management division, we have contracts in place that range from 1 to 3 years across this part of our business. For the carbon abatement space, it's between 7 and up to 12 years. And in the renewable energy space, it's where it stretches right out into the 30 plus year horizons as well. And so we do have a nice solid contracting model that we've established. So talking more specifically to production volumes across the three parts of the business, on the left-hand side, we have a chart depicting the production of energy across the last couple of financial years. And as we see this expansion of our both the operating portfolio up and down the East Coast, but also as our team continues to extract more and more biogas resource from our existing sites, we're able to produce more renewable energy, and we're also able to produce more LGCs and more ACCUs. One main area of change that we have, that we were well aware of for some years, is the dynamic nature of the Australian National Electricity Market, or the NEM. And we've seen a sizable change occur in October last year as the market moved from a 30-minute settlement mark to a 5-minute. And also, when you add on top of that the increasing amount of variable renewables entering the market, we're seeing the daytime pricing or the intraday pricing fluctuate from $0 through the day when it's a lovely blue sky day in Queensland or around Sydney, right through to hundreds of dollars or even thousands of dollars per hour when it's at the peak periods in the morning and the afternoon. So we've strategically positioned both the sites that we have and also the equipment we're using to capture and participate in that market volatility by offering the ability to ramp up and ramp down our generation. Now, what we'd expect to see in the coming years is more of a focus on a generator's ability to participate and capture that higher pricing. And as Jessica touched on earlier, this is where the batteries will also play a key role in our portfolio enhancement in the coming years. But what we're trying to show you here on this slide is the healthy business growth that we've achieved over the last few years within our existing portfolio, and as we continue to expand and extract more biogas from those facilities. So diving down into some more of the numbers, the financial numbers, with those increasing volumes of ACCUs, of LGCs and of renewable energy, ultimately we've seen an increase in our company revenue, but we've also seen a consistent degree of EBIT margin across these years. So the fact that our business has grown from a heavy focus of efficiency, of performing our service in an agile and a very lean manner, we've maintained that through our company growth over the last few years. Do you notice?
No, I think that's good.
When we provided the market with our first formal update, because we did only list on the ASX in October of last year, we were excited to share the news, both of our results up to December, which is what we presented on this slide, and to reaffirm our forecast for the full financial year as well. So the information has been out in the market now for a matter of months, and we're proud to talk to the fact that across the period, we've continued to maintain a very safe operating level of safety and safety margins within our business, while also attracting a number of new staff. It's important that as we see more and more work and more opportunities in this space, that we've been able to attract the new talent, but also retain the talent that we've had historically as well.
Right. So I'll speak briefly to growth and then open up to questions. So we, first of all, I have to explain that this graph on the left-hand side is growth within our existing contracts. So there is no blue sky, there's none of the currently, tendered projects within this graph. This is what we have already locked in. And because the majority of the landfills that we operate on are still growing, they're accepting waste, and they will continue to accept rubbish for the duration of our current agreements on those sites. It means that year on year, there's more gas being generated, there's more gas for us to capture, there's more gas for us to convert into revenue streams. And so the growth that you see in that bar chart is reflective of those contracts that we currently have on landfills that are continuing to accept rubbish and grow. I would also note that one of our sites where we generate power was closed over 20 years ago. So in the event that in the next 5 to 10 years, we can all be very hopeful that there is a reduction of waste in general in society and that there'll be less waste to landfill, that is everyone's hope. We will still have sufficient biogas. We will have a legacy issue that we will be dealing with, and we will still be generating power on those sites. Moving to the other side of the graph is our strategy. And so we see 3 areas of priority over the next 5 years in which we're focusing. The initial priority 1 area, which was very much the focus of our equity raise during the IPO, is about increasing our biogas resource. That's doing more of our core business, expanding existing projects, expanding our portfolio of power generation and carbon abatement assets. Priority 2 is about strengthening our premium electricity offering. So as Jared talked to, we very much chase and look for the opportunity in the volatility of the market, the electricity market. And that has required us to develop a unique system, a control system for our assets that we call the Dynamic Asset Control System, or DACS. And it enables us to, or the system that we have created, reads data from the market, from the gas fields, from the engine condition, and enables us to output power during those peak premium pricing moments. And also looking at, for example, synergistic solar projects where we have interconnections that we can optimize with the addition of some of the intermittent renewable power sources as well. Our priority 3 is diversifying on our existing asset portfolio. We have built a body of knowledge and understanding of the renewable energy space, and we can apply that knowledge to help further the transition towards a greater penetration of renewable energy into the market. So I think that we'll wrap up there and open to questions, Simon.
Right. Thanks, Jessica, and thanks, Jared. First question, how does the Chubb review recommendation that landfill gas ACCU projects should incur upward sloping baselines impact a generation of ACCUs moving forward?
Sure. So first of all, we were extremely happy, relieved, delighted by the Chubb review. So we actively participated in that review. We were very pleased to host Professor Ian Chubb at our Mugga Lane facility. I guess the review of the methodology needs to be understood in the context of the Emissions Reduction Fund. There are 2 landfill gas methodologies currently in play. One applies to transitioned in from pre-existing carbon abatement schemes, for example, G-gas and greenhouse friendly, that preceded the carbon farming initiative. Baselines. A baseline is set, it's considered the what you should be doing anyway in the absence of any program. And under the Emissions Reduction Fund, any new project pretty much has a 30% baseline or higher. The projects that have been allowed to transition over many years, producing electricity and coming into the ERF, have baselines significantly lower than 30%. Hence the criticism, how is the additionality met on these projects? The CHUB review is currently, it's just convened the technical working group again to actually start looking at solutions for addressing these criticisms of that methodology. And they have, they hope to implement recommendations within the next 6 months, is my understanding. We're participating in that technical working group. And the expectation is that there will be increasing baselines, particularly for projects that don't meet that 30% default baseline that is set under the ERF. Our baselines bar one closed landfill project, but on our baselines are 30% or higher. The one large metropolitan site where we operate is the Mugga Lane facility in Canberra, and it has a baseline of 66%. So that gives you a little bit of indication. You can imagine where we stand, and we certainly think that increasing baselines lead to optimization of the abatement activity on a site. So we see it as a positive.
Right, thanks, Jessica. Question, do waste management sites typically have a gradual decline in terms of their useful life and ability to generate biogas and therefore power generation?
Sure, I might take that one.
Good.
So as Jessica touched on earlier, with the generation of biogas from these sites, this happens over a very long period of time. Every unit of waste coming in today will add to a production of gas into the future. So if we were to cease placing waste into any of these facilities or all of the facilities around Australia, the 1,100 or so landfills that have been identified will continue to produce biogas right out into the next 30, 40 years. The sites that we have, which are in the more densely populated areas of Australia, receiving a mixture of waste from household material through to construction material, therefore produces a mixture of gases. And the way that we've set the sites up is to chase that gas and to capture as much as we can possibly capture today to help the council or help the landfill operator meet their environmental obligations. But ultimately, changes to the waste material coming in, it will have an effect in the years or in the future years as to how much gas and what that gas makeup looks like. And we would see that as a positive to see a reduction in material coming in. Ultimately for an environmental outcome, but as a business, we're well positioned again to work through that piece, as we've demonstrated with the site in our portfolio having closed over 20 years ago.
Great, thanks, Jared. That probably concludes the Q&A just in terms of timing. If anyone did want to follow up with any questions or organise a one-on-one, feel free to reach out. I might just hand it back to you for closing remarks, Jessica and Jared, and we'll finish up there.
I think we're just really delighted to be able to reach out to people who are interested in the business and who wanted to also, if we could thank our existing shareholder base for believing in this transition to renewable energy and for supporting the growth of this business. We've had year-on-year growth and profitability since day dot, and we look forward to continuing to pursue some incredibly exciting and worthwhile projects.
Yeah, and just adding to what Jess is saying, I mean, there's so much more opportunity here, both in the waste sector of Australia, but in the energy sector as well. So it's really exciting as to where else we can apply our developed technologies, where we can apply our learnings across the Australian market. And we look forward to doing this over the coming years.
Great. Thanks so much, guys, and thanks all for joining.